Okay, from our studios in Los Angeles and Tampa, this is Green Tag Theme Park in 30. I'm Philip from Gantom Lighting and Controls, and I'm joined by my delightful co-host, Scott Swenson of Scott Swenson Creative Development. On Green Tag, we look at the top news each week and we explain why it matters to industry professionals in the theme park and themed entertainment spaces. And of course, this week we're going to have to talk about Comcast splitting up. And that news broke right after we recorded last week's episode. And so I'm sure it's old news to all of you listening, but hopefully we're going to bring a new perspective or at least bring up some questions or discussion that might illuminate a different angle for you all as you are listening.
Couldn't these giant corporations be just a little bit more considerate and actually break this news right before we record instead of right after? I mean, clearly they're paying attention to us and they're like, oh, we don't want them to talk about it because, you know, they'll say something we don't want them to say. So let's give it a week, let it settle, and then they'll catch up next week. Shame on them.
Shame on them. Shame on them indeed. The Comcast and Six Flags, my goodness. So I'll give some establishing and then maybe we could just talk about it. But just to catch everybody up, on June 29th, Comcast confirmed it will split into two independent publicly traded companies through a tax-free spinoff of NBCUniversal and Sky. So basically, they're splitting up the entertainment and the connectivity. That's how I would describe it. It's like all of the technology, connectivity type of stuff will be one company, and then all of the entertainment, including all of the theme parks and all that's going to go under another one. So the new NBCUniversal will have Mike Cavanagh as the CEO, and it's going to be focused on the entertainment anchored by its growing theme park division. It's going to have the television studios, NBC, Telemundo, Peacock, Bravo, and Sky. And then the former Comcast CFO is going to become the CEO of the broadband side of things. So Wall Street was pretty pleased. It was on the announcement, it went up quite a lot. And then of course, it goes up and down, but it closed up about 4.5%, which is one of the largest gains it's had in a very long time. And during the day, the stock spiked up to 25% and then ended there. So that's the background. I wrote several articles about this last week, if those of you that read any of my stuff, but overall, I think this is an excellent move. I actually agree with Wall Street. I think no matter how you slice it, it's a good move, and it's a really good move currently for theme parks. Maybe in the future it could be complicated, but I think currently it's a good move. And the reason is because, okay, so you have these big companies like this, and I think maybe there was some argument in the beginning, 10 years ago when it was originally purchased. Maybe there was some argument about connectivity and synergy because everyone loves to say synergy is going to make us money. So there might have been some argument, but it's pretty clear that there's not really any synergy between a theme park and the, Ethernet and broadband stuff that goes into your, that provides. So there's really no synergy there. The cost savings were not there. So I think the problem is that that the theme park company, the NBCUniversal, has been devalued because it has been bundled and nested under Comcast, which is how will these things work, right? Large publicly traded companies, they have the CEOs of those companies have an incentive to conglomerate different companies together, even if it doesn't make any sense. And the incentive is because CEO's compensation is usually based off of the total revenue or the total size of the company. So their incentive based off of their earnings is driven by getting bigger and bigger and bigger. That doesn't always make it a good company. And then the problem is when Wall Street is valuing stock, they're valuing based off of your worst earners. So basically, the theme park division is actually a growth company. We just talked last time during our show about the massive growth that they have from Epic Universe and all that. So the entertainment division is actually a growth company, but the Comcast side of it is a mature, slowing company. And so the theme parks company has been suffering because it's been taking the earnings multiple of the broadband company. So that's kind of what's happening. So when you split these two things up, you're going to see that the theme park company is going to have a higher multiple, and potentially that could help because it could potentially mean it gets better access to free capital or better access to capital. It also is going to be a higher multiple. It's going to be worth more. It's going to be more adequately evaluated, right, based off of its potential. So I think in that lens, it's a good move no matter how you do it. It's just not good for the CEOs because they make. But I'm sure there was some deal to give them money so they could be happy about it. But some of the things I was thinking, there are two. Besides that, there are two things I was thinking about. One is that now that it's going to be split up, we're going to get a lot more granularity about each division. So we're going to be able to see the theme parks and how much each is making. We're going to be able to see Universal Horror Unleashed and Universal Kids and how all those things are fleshing out. But also it's going to be interesting because I think they're going to have to decide if they're going to put their capital behind Peacock or keep it in the parks. And the only reason that they might be thinking about Peacock is because Peacock is not competitive. And look at how long it took Disney Plus to become profitable and Netflix and all that. And so I think that's going to be a decision point down the road, which is what do we do with Peacock? If we're going to make it actually viable, it's going to take a lot of money, which could take away from the park section. But that's going to be potentially down the road. And then further down the road, right, is the idea of mergers and acquisitions, because it's going to be, when it splits up, it's going to be potentially more attractive to be acquired because it's just theme parks and entertainment, right? So you could see it being acquired. And this is similar to something that Robert Niles wrote. He was talking about Netflix, Amazon, and Apple are looking to get bigger to support their streaming services. And so that could be a potential, they could make themselves a target. Now, it's important to note that they literally have denied the spin will result in some sort of acquisition. They actually have already talked about this, but I kind of feel like whenever you deny something at the beginning, it could be clues. I mean, that's a little bit of a weird thing to say, but anyway, that's my thoughts on this. Scott, what do you think? I rambled.
Well, I think it's and again, you've put in a lot of effort into this, and as you say, you've written several articles about it. So yes, you had to kind of spew and let your head explode for a moment. I'm gonna step back just a little bit and look at it from a whole. Whenever a company, a company that is at best a parallel corporation to a theme park, whenever they buy a theme park, you know that eventually they're going to sell it or they're going to split it off. They're not doing it because, yes, there's the talk that sounds good to stockholders of there's synergy between there's synergy between the connectivity that we have with Comcast and the theme parks and blah 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 blah. And there is, as long as you develop it, but that requires a focus to develop it specifically. And to make that your business model and not just the sales pitch for the acquisition of the parks. So this is not really a surprise. The fact that it's dividing, I think, is probably the most surprising piece about it, as opposed to selling it off to another entity. Right. So I think the division basically means that Comcast has a great deal of confidence in NBCUniversal, and they have a lot of confidence in the fact that because the key parks are doing well. They've had great growth. They continue to grow. They've continued to do announcements. But I think that generally speaking, when things like this happen, when these gigantic conglomerates decide, let's break these into work groups that make sense. Let's break these into work groups where we can actually focus. As you say, we're going to get far more granular on what's working and what's not. And I think that is part of the reason, so that these two entities do not need to compete with each other for funding. Right. When they become separate corporations or separate entities, you're either funding the digital side, the connectivity side, or the entertainment side, and to sever that link of these, they have to contribute to one another. Now they don't. Now they are separate entities, and that usually 9 times out of 10 is good for both of the sides involved. Yes, it is at least temporarily going to elevate Universal. We'll see what happens with some of the newer stuff that we've talked about in previous episodes. But I think that I agree with you that overall, at least for the next, I would say 5 to 10 years, this is probably a very good move. I can't believe that going back to when Comcast acquired Universal in the parks, I can't believe that this was not part of the ultimate plan eventually, is to either sell them off or divide them off. Like I said, it is more surprising that they have divided the company, but I think that's a positive sign versus a negative sign. So we'll just have to kind of keep an eye on it and see how it progresses. If I were working at Universal right now, I would see this as if I work at one of the parks or even in the corporate level, from the entertainment side, I'd be thrilled by this.
Yeah.
Because all of a sudden it's not, because no matter what the paperwork actually says, when a company buys a company that is a different industry, they're always the also rans. They're always the Comcast is a communications company, not an entertainment company. And so no matter what happens with the money, no matter who's profiting the most, there's always that feeling of, oh yeah, the new kids, no matter how long it's been, it's always the new kids. This is the entity that takes money away from our core business.
Right.
And I would be thrilled. I would be like, okay, so now we are our own core business. We are in the entertainment industry. We are not in the communications industry. We are not a subsidiary of a company that's in the communications industry. We are our own entity. And then as far as the CFO, I think the CFO becoming a CEO is something that he's going to be thrilled about. And I think having someone who can, at the CEO level, who does not have to focus on what's happening with the Ethernet and the connectivity side of the business is going to be beneficial for the parks. I think it's the right move. I think if I were part of the parks, I would feel good about it. And I also think that it may actually, and I'm going to make this up a little bit, but there is a possibility that part of the reason that this was decided is because they're starting to see some of their recent park forays not living up to expectations or not being top notch. And maybe that was a straw. It won't be the only reason, but maybe that was a straw that broke the camel's back to say, yep, we need to separate these, because everybody, kids resort, everybody was suspicious from the get-go. It's one of those situations where it might be that their own business has changed enough that they're looking at it going, we really need somebody to look at this. This can't be part of a larger disassociated entity. So yeah, right. I agree. I think this all makes sense. This is very much in line with what normally happens when larger corporations buy entertainment or theme park companies. So yeah, I think all the stuff that you said, and I think it is all true. I think it's something that we should watch and make sure that whoever's in charge is making the right decisions for the theme parks, and whoever's in charge of the connectivity side makes the right decisions for that side as well.
So it is a 12-month timeline. I didn't mention that in the beginning, but that means it's, this is a year before anything is going to happen on paper. But I think, to your point, Scott, like internally, I think obviously people are already moving with that direction in mind, and you're thinking about it internally. In terms of, for us, how this might impact us in our, anybody who works at Universal or works in a vending position with it, I think, one path is that this could allow them to be a little bit more risky or to be more entrepreneurial, I think is how they put it when I think Mike talked about being more entrepreneurial. But essentially, if you're a growth company, you can take more risks and you can bet on new ventures.
And if you're going to bet on new ventures, you need the ability to be nimble. And if you're a smaller corporation, you can be more nimble with less risk.
Right. And I think, so that could mean potentially that they might be trying some additional new items. We have the Horror Unleashed and Universal Kids as our new testings, but potentially even more testing from that, or new experiments. So we could see that opportunities open up for us as well. But there's also a theory that comes from Robert at Theme Park Insider. So his theory is a two-parter. First, he thinks that this is going to make them, the NBCUniversal, too much of an acquisition target. So he thinks that it'll be acquired pretty quickly. And then that once it's acquired, potentially the theme parks will be sold off to private equity because essentially the theme parks still may not fit within the entertainment umbrella, right? Because all the other entertainment's pretty classic studios and that sort of a thing. And then the theme parks are the physical experiences in the entertainment space. So he's thinking they might be split up and then given to private equity. So basically somebody would buy, like maybe Netflix or Amazon would buy NBCUniversal. They would keep all of the film and all the studios and all that stuff, and they would sell the physical experiences to private equity. And then that could lead to a decline because then private equity would do what private equity does, see Six Flags for the playbook on that, right? That's how that would work. I don't know about that because I actually think that of the people that we would think, and maybe somebody will come out of the woodwork that we're not thinking about that might come in to be a potential acquisition. But of those people, I think Netflix would probably maybe try and keep it because they already do physical experiences. I think Apple would actually probably potentially also keep it because I think Apple having physical experiences would be a huge boom for them. I think they could work. I mean, so I think any of these companies, I think physical is the new thing, is what I'm trying to say. I guess to boil this down, physical brand experiences, physical in-person things are where it's at right now. And I think that even if they were to be acquired, I'm not sure they would spin it to PE because I think every brand is kind of thinking about how they can do physical experiences right now. And this would be a good opportunity for them to get in, even if they just do a themed store at the Universal City Walk places for their new brand that they just bought. That would still be an inroad. But what do you think of that, Scott?
Well, I think that I think it's possible. But I don't necessarily think that just because they become a prime target for acquisition, that they will become acquired by someone else. I think being a prime target is not a bad place to be. That keeps the focus on you, and therefore internally gives you more reason to spend money and continue to grow, to get greedy. Now, with private equity, you also have to recognize that when private equity acquires something, it's not necessarily always bad for the entity, especially not short term. Recently, we've seen a lot of examples of where it has been, but private equity, when a private equity purchases an entity, yes, they're buying it to sell it. Absolutely, but they're going to sell it in one of several different ways. They're either going to elevate its value so that they can sell it off to someone who wants it really badly, and they can pay top dollar for it because they make it worth on paper significantly more. They will hang on to it and just make it part of their portfolio. That has happened in the past, not for very long usually, but it becomes part of the portfolio, which then elevates the entire private equity firm, and then of course going public, and so there's always those opportunities. I mean, I don't think it's always necessarily a bad thing, but as I said, recently we haven't seen a whole lot of good come out of these kinds of sales. I don't think, I guess my feeling is, and I think I said it earlier, if they were going to sell them off, they would have sold them off. They wouldn't have made it a separate company. They wouldn't have split the company.
Right.
If the idea was to generate profit and generate revenue through the sale of these things, they wouldn't have split it off as a separate company. They would have gone ahead and said, we're putting the parks up for sale. We're putting the parks division up for sale, and kept, because the alliance between connectivity and streaming services is significantly closer than that between the connectivity or the digital side and the live experience. So I don't know. It is possible that they could be acquired, but they would have made it much simpler, and they would have made they would have made it much more profitable for them, I would think, to just sell off what organizations want, as opposed to splitting it into two separate companies and then selling the full company and then having the company have to sell off what it just, I don't know. It doesn't quite ring true to me, but it's certainly a possibility. It is certainly a possibility.
Right. Well, I guess we'll just, again, like you said at the beginning, we're just going to be waiting and watching. But I think for now, it is good news. And I think for us as professionals, it's good news. It also signals, though, there could be some opportunity with Universal to experimenting with something new, whether it be a new destination or a new type of land or whatever. I know that they have the Pokemon build out that's going to be exciting. That's coming to Universal. Or in Orlando side.
It's basically a new forced focus on the live experience side.
Right.
So short term, that will be good for us.
Right, exactly. Yeah. And that's all we're going to think about, because 12 months in this day and age is a lot. It's just a long time. So.
It's what, 36 news cycles, I believe, isn't it?
Yeah. So let's move on. I think our next story is something that a listener last week asked us to discuss. He said here, he asked us, next week, I'm hoping you'll discuss the closing of FunSpot Atlanta, as well as the closing of several smaller parks in the U.S. in the past years, and why this trend is happening, and a discussion on what might happen to the coaster there, Air Force One, and the logistics of moving an attraction that size, if you think it would happen. And the story, of course, is that I'm sure you all have also heard that FunSpot America has announced it will close permanently on August 2nd, which is less than a month away at this point. The announcement marks the end of nearly a decade of FunSpot America's presence in Georgia and leaves the future of the park's signature attraction, Air Force One, unanswered. So that's the story. Scott, do you have any insight on?
Well, I don't have any insider information on FunSpot specifically. I will say that the post-COVID quote unquote recovery has happened, and if companies still can't make it, then they're finally deciding we can't make it. We got to let go. It's time to. We've been sitting on the sinkhole too long, and we can't. Our whole company is going to go under. So I think that's why we're seeing what I will refer to as we tried sales. We tried closures. As far as moving a coaster, moving coasters is something that for many, many years during the golden age of theme park was something that was done all the time. A park would close, another park would buy its assets, and it's something that can be done. But I think, and again, I don't build coasters, so I don't have the numbers for this, but I think we're almost at the point where in most cases, things like that, the asset transfers they don't transfer to an experience or an attraction that is above the one it's leaving. They will transfer to an attraction below the one it's leaving. The only exception to that usually is if the attraction has historic significance, and then they can brag about, we brought the world famous XYZ coaster from so and so to here. And that may be the case. I don't know. That may be the case with this coaster. It does have some clout in the coaster industry. But I'm wondering if it doesn't just go to another FunSpot.
Right. That's a possibility. Yeah.
Because that used to happen all the time at Busch Gardens. It happened at Six Flags. It happened at, in fact, Six Flags for a while did a whole, like 2 or 3 seasons of what they called touring coasters, which would be, they were permanent, quote unquote, permanent installations that would only be in a park for 2 to 3 seasons and then move to another park and rotate, so that they could, instead of buying new coasters, they could take perfectly good existing coasters, move them to a new location, and then all of a sudden it becomes a new marketing focus. So the idea of moving assets from one park to another, nothing new. It can be done. What I don't know is whether it's more cost effective to start from scratch or to move in an existing piece. And I think that almost has to be taken on a case-by-case basis. I mean, the first thing I think of, and this is probably the most simplistic, is do you have the ground to put it on?
Right.
Do you have to go through, because the moment you have to go through redesigns, you might as well build a new coaster. So
That's
if you
right.
can
That's
if you can lift it and plop it down, I would think that would be still a viable option. But the moment you go into any sort of redesign, then you might as well just build a new one.
Yeah. And
So.
on the trend, do you think this is something that's kind of in the death of the mega park type of thing we've been talking about, or is this more about macroeconomic, or is this more about the individual market? What do you think?
I think, well, gosh, I wish I had a good answer for this one. I don't. This is so. I think. Well, I'm going to tell you my gut, and there's going to be people out there who's going to comment and argue with this, and that's completely fine because I have nothing to back this up other than my gut. My gut is that these smaller parks are looking at the whole situation, looking at where we are as a country, looking at what our tourism is, and going, we just don't want to fight this anymore. We're just, they've survived COVID, and they thought it was all going to be free flowing from then on. And the economy has not done what we thought it was going to do. Tourism has not done what it's done, or what we thought it was going to do. International tourism is not at all what we thought it was going to do. And they may be just looking at it going, we could sell this, invest this money in something completely different, and generate significantly more profit and not have to work as hard. So I can certainly see that happening. The question always is, what do they do with their assets? And we'll see where that goes. But if they've got their line of skee-ball machines at a garage sale, then we know something. They're trying to get rid of something. I don't know exactly why. But that's my gut.
Yeah, I am thinking along those lines as well. I just think that we've talked about this for weeks, but I think that the calculus from the guest standpoint is changing a little bit, and I think it's, say you put whatever label you want on it. Maybe it's higher prices. Maybe it is less disposable income, consumer sentiment, rising debt, whatever label you want to put on it. But I think what it boils down to is like the value calculus when you're looking at going to an attraction. And I think that we're seeing the same K type of shape thing, but in this. So, Disney, because Disney builds attractions that are worth waiting for, that you can't miss because they're once in a lifetime experiences. Rise of the Resistance is incredible, right? Just everything. It's insane. And same with Universal, right? The Universal stuff is, Battle at the Ministry. It's kind of worth it. It is kind of worth it. It's kind of worth the wait. I would say, I don't wait for anything. And I think that's the calculus that you're getting, right? Is, it's like, we have these incredible destination experiences, but then, are you really going to want to wait for a coaster at a Six Flags or a coaster at a Fun Spot? Or it's kind of like, and then there's no, again, then the heat, the creature comforts, there's not much to do. Then the food, I mean, it's kind of like the calculus is kind of bad, as opposed to going and doing something that is cheaper, that you could have kind of maybe just as much fun with a group of people doing something and better food, or I don't know. It's kind of like, why would you do this instead of just going to a restaurant?
And I also think specifically, the two examples you gave are things that people can do with their families.
That's right.
It does not. It's not a divide and conquer kind of park. It's not, let's set up a meeting time and meeting place. You guys go off and do. You go off and do those crazy kid rides, and we'll meet you later. So I think that may be a part of it, or that may be a factor in it as well, is that they want to make sure that, and we see, Six Flags is trending that way, Busch Gardens is trending that way, SeaWorld is trending that way, to go back to here's things you can do as a family. And I'm not sure that Fun Spot is necessarily something you can do.
I agree with that. I want to end here with one thing that we didn't put in the show notes, but it's interesting to note because I'm here in Disneyland. So Disneyland has opened up weeknight passes, specifically targeted to, they have kids passes and they have adults passes. So they're kind of targeting the idea of you can bring your whole family to Disneyland for an affordable price, because you can show up at 6 p.m. and stay till midnight, or you can, or whatever. So it's still a good amount of time, and it is $60, which is a really good price point for Southern California.
Yep.
That is an incredible price point for the summer. For a summer when the kids are off school and you could take them, your family, it's a pretty good evening, right? And we talked previously about how kids don't always spend the entire, you're not going to go park open and park closed. They're going to get tired, food breaks, whatever. You could have dinner, you could show up, you could do actual in-park time at 6 hours, which is plenty of time for $60. It's $10 an hour. That's pretty good for Disneyland. And they're doing 2 shows, 2 Paint the Nights, 2 Fantasmics. There's plenty of entertainment, plus the fireworks show. So there's, 5 big crowd sucks every night. So it's a pretty, so anyway, but also it points out that if Disneyland is having to offer $59 tickets. Yeah.
Yeah. Yeah. Well, and it's to rebuild the family audience. Yeah. I think that's, because all too often they have tried so hard to make it a kids audience, an adult audience, a tween audience. And it's always been very elusive to find out what is it, something that will bring the whole family together. And maybe this price point will help. I don't know. Well, hopefully we've brought the whole family together and everybody's sitting around listening and watching this show right now. But unfortunately, kids, it's time for us to move on because the show's over. It's called Green Tag Theme Park in 30, and we've already overdone it. So on behalf of Philip Hernandez with Gantom Lighting and Control and myself, Scott Swenson with Scott Swenson Creative Development, this is Green Tag Theme Park in 30. Hopefully you've had another lovely Monday listening to us because that's when most people tell me they listen to it. And we will see you all next week.